Well, the threat Europe's problems posed to the global economy loomed large over the Asian markets, with some $30 billion wiped off the Australian market today. Italy marks a dramatic escalation. It's the world's 8th largest economy, and its borrowing costs have hit the kind of levels where the country will very quickly find itself unable to service its debts. The turmoil is panicking investors, who are largely waiting it out on the sidelines, as Emily Stewart reports.
Australia's Reserve Bank remains alert but not alarmed about the continuing debt woes in Europe.
In preparing the Reserve Bank's latest forecast on the world economy, we've assumed that the European authorities do enough to avert a real disaster, but are not able to avoid periodic bouts of considerable market volatility and uncertainty, and we saw another one of those bouts last night.
The cause of that volatility was Italy's 10-year bond rate rising above 7%, a level deemed critical to whether a country can meet its debt obligations. It comes on top of the political chaos in Greece and Italy, where the leaders of both countries have agreed to step down, but their replacements haven't been decided. There's now talk the euro currency could fall apart, with the German government calling for a new European Union, including deep structural reforms. But the president of the European Commission, José Manuel Barroso, has called for unity and warns against a fragmented euro.
It will jeopardise the future prosperity of the next generation. That is a threat that hangs over us. And it is that threat that guides our commitment to resolving the situations in Greece and elsewhere, provided that those countries play their part as well.
The markets, though, aren't buying it, with Wall Street down more than 3%.
I think that the optimism that investors had regarding a positive outcome in Europe is dead for right now. Now, maybe the stock market can regain optimism on another front, like the economy here does better or the Fed does QE3. But Europe itself right now, any hope that there was going to be something positive there, I think, is gone.
The Australian market fared a little better, but couldn't escape the negative sentiment.
Certainly market participants are of the feeling that growth will definitely be a lot slower, and with those reasons we also seen a fair bit of sell-off in the commodity prices overnight. That's led to a lot of weaknesses in our commodity sector today.
With so much uncertainty, investors are simply staying away from the stock market.
A lot of clients are certainly sitting on the sidelines or waiting for some resolution, but I can't see that coming in the short term. And for those reasons today you have seen a lot of weakness in the market, and also the financial sectors of the market have also been weaker.
The European situation is unsettling markets worldwide, and Federal Treasurer Swan wants APEC leaders to push for a quick solution.
It's really important that APEC economies speak with a united voice to urge the Europeans to quickly implement all of the policies that they have put forward to solve the financial crisis.
Italy's president has moved to reassure anxious markets, promising Silvio Berlusconi will soon be vacating the Prime Minister's office.